Dear students, welcome you to session 15 video, chapter Financial Statement Analysis, Financial Management, 6th semester BCom of Mangalore University. In this session, let us understand the common size financial statements, that is a method used for financial statement analysis. Common size financial statements is a financial tool for studying the changes as well as the trends in the operational results and the financial position of a business firm. There are two types of common size financial statements, the common size balance sheet and the common size income statement. In case of a common size balance sheet, the fixed assets or a current assets are shown as a percentage to the total assets of the concern. And same way, each liability is shown as a percentage of the total liabilities. In case of common size income statement, the items of expenditure is shown as a percentage of the sales. So we take sales as 100 and all other items are expressed in proportion to sales. In case of a common size balance sheet, the total of the assets is taken as 100 and all the other assets value is taken as a proportion to the total assets. And the total liabilities is taken as 100 and each liability is taken as a proportion to the total liabilities. Now, in this problem, the information regarding the assets and liabilities of two firms are given, X Limited as well as Y Limited. So we can see here land and buildings, plant and machinery, investments, stock, sundry debtors, cash at bank and total. So total is 8 lakh rupees for X Limited and 14 lakh rupees for Y Limited. Similarly, liabilities, share capital, 12% debentures, 10% preference capital, reserves and surplus, dividend provision, sundry creditors, bank overdraft, and the total is 8 lakhs and 14 lakhs. With this information, we are to prepare a common size balance sheet. The format of a common size balance sheet is this way. The first column is particulars. The second column is for first company X Limited, the values whichever is being given. Y Limited is the next column, and the third column is the percentage of X Limited percentage, and the last column is Y Limited percentage. Now, what we'll have to do is we'll have to write the information given here. So, we are writing all the assets as well as liabilities and the values of the assets and liabilities. So, land and buildings for X Limited 80,000, for Y Limited 1,20,000, plant and machinery 3 lakh and 6,25,000. Similarly, investments, stock, sundry debtors, cash at bank and the total is 8 lakh rupees and 14 lakh rupees. Afterwards, we write all the liabilities. The equity share capital 2 lakh and 3 lakh, preference share capital 2 lakh and 2,50,000, reserves and surplus 1 lakh and 1,20,000, debentures, dividend provision, sundry creditors, bank overdraft, and the total is 8 lakhs and 14 lakhs. And now we start with the preparation of percentage. So we take the total of the assets as 100. Now in this case, in case of X Limited, 8 lakh rupees is taken as 100 and all the other items, that is land and buildings, plant and machinery, investment, stock, sundry debtors and cash at bank, all these items are shown as a percentage of the total assets. Now we'll see how this can be done. So 8 lakh rupees, we write it here as 100 total. Now land and buildings, that is 80,000. So 80,000 rupees divided by 8 lakh rupees into 100, that is 10%. So it means land and buildings are 10% of the total assets. So 80,000 divided by 8 lakh rupees, that is the total, into 100, that is equal to 10. Next is plant and machinery, 3 lakh rupees. 3 lakh rupees divided by 8 lakh rupees into 100, which is equal to 37.5%. What is the meaning? It means that the plant and machinery value is 37.5% of the total assets. Actually, that is the highest. Next is investment, it is 1 lakh. So 1 lakh divided by 8 lakh into 100, that is 12.5%. Stock 1,50,000. 1,50,000 divided by 8 lakhs into 100, that is 18.75%. Sundry debtors 1 lakh. 1 lakh divided by 8 lakh into 12.5%. Cash at bank 70,000 divided by 8 lakh into 100, 8.75%. So first we have taken the total assets, that is 8 lakhs. 8 lakhs is taken as 100, and all the other items of assets, that is current assets as well as fixed asset, are shown as a percentage to the total value. Now when you look at these percentages, we can make out that among these, plant and machinery forms the highest percentage, that is 37.5%. Next comes the stock 18.75%, and cash at bank is just 8.75% of the total assets. Similarly, we will find it out for Y Limited. So Y Limited total is 14 lakhs. Now 14 lakhs will be taken as 100. The value 14 lakhs will be 100, and each item we have to find out the percentage. Land and buildings 1,20,000 divided by 14 lakhs into 100, 8.57%. Next is plant and machinery 6,25,000 divided by 14 lakhs into 100, 44.64%. And investments 2 lakhs divided by 14 lakhs into 100, 14.29%. Same for stock also 2 lakh, that is 14.29%. Sundry debtors 1,20,000 divided by 14 lakhs, 8.57%. Cash at bank 1,35,000 divided by 14 lakhs into 100, 9.64%. This is how the percentage values are found out. Now comes to liabilities. So we have written down the values of liabilities. Now what we take is the total of the liabilities is taken as 100. So in case of X Limited, 8 lakhs is taken as 100. And next, each item, now equity share capital 2 lakh. 2 lakh divided by 8 lakhs into 100, that is 25. Again preference share capital is the same amount, 2 lakh divided by 8 lakh into 100, that is 25. Reserves and surplus 1 lakh divided by 8 lakhs into 100, 12.5%. The same amount for debentures 1 lakh, that is 12.5%. Dividend provision 50,000 divided by 8 lakh, that into 100, 6.25%. 1,50,000 divided by 8 lakh into 100, 18.75%. Bank overdraft nil. Again for the next company, that is Y Limited, 14 lakhs, this is the total. 14 lakhs is taken as 100 and it is written here. Then each item is taken one by one, that is 3 lakh rupees. 3 lakh divided by 14 lakhs into 100, 21.43. The next one is preference share capital, that is 2,50,000 divided by 14 lakhs into 100, 17.86. Next one is reserves and surplus 1,20,000 divided by 14 lakhs into 100, 8.57. Debentures 2 lakh divided by 14 lakhs into 100, 14.29%. Dividend provision 70,000 divided by 14 lakhs into 100, 5. And sundry creditors 4,10,000 divided by 14 lakhs into 100, 29.28%. Bank overdraft 50,000 divided by 14 lakhs into 100, 3.57. Now we can make out the percentage of different liabilities to the total liabilities. So in this case, in case of firm X, both the equity share capital and preference share capital, they are 25%. They are 25% of the total liabilities. You can make out here, and they are the highest. But in case of the second firm, Y Limited, you can see here that sundry creditors, they are 29.28% of the total liabilities. So that is the highest amount, 29.28%. And the next item here is the equity share capital, which is 21.43%. Now the sundry creditors, here we can see here it is 18.75% of the total liabilities, and bank overdraft is not there. And in case of Y Limited, that is the lowest percentage, that is bank overdraft. So in this way, common size balance sheet is prepared. So in case of common size balance sheet, the total of the assets and the total of the liabilities are taken as 100, and each of the item is taken as a percentage of the total item. So in this way, we have found out the percentage of different item, and it gives us a clear picture as to what percentage of each item bears to the total assets. Students, if you have any doubts, you can ask me. Thank you.